on and answer a question that I was emailed this week following the release of ST Outlook, where I spoke about watching the 80-day FLD. And that question was basically this. Must we really wait until the 80-day cycle FLD is crossed before we have confirmation of that 40-week cycle? If I am trading the 40-day cycle, okay, a 40-day cycle is a cycle that we recommend trading because it's a really good cycle to trade. I've been it. I've found it very useful, the 40-day cycle. So if you're trading the 40-day cycle, if this trough on the 4th of June was a trough of the 40-week cycle, then of course you would want to get into it as soon as possible as trading long on the 40-day cycle. So in Saturday's ST Outlook, I disappointed somebody by saying we're only going to know for sure whether the 40-week cycle trough has formed in price when price actually crosses that 80-day cycle FLD. And I see a question from Nathan. I'll get to that in a moment as well, Nathan. If you've got to wait until price crosses an 80-day FLD before you get confirmation of a 40-week cycle trough, but you're trading the 40-day cycle trough, you have a big problem, right? Because once price crosses over the 80-day cycle FLD, there's probably not much upwards movement left in the current 40-day cycle. So this question to me was, do I really have to wait until price crosses the 80-day FLD before I can make trading decisions on the 40-day cycle? So the answer to that question is no, you don't. And I'm going to present something here which is not it's not something that Hurst ever spoke about, but it's something I found very useful over the years. And it's something I use to provide me with an early confirmation of the formation of a cycle trough. The first thing I'd like to say about this is that on Wednesday, the 6th of June, our previous ST Outlook, I started speaking about the possibility that the trough on the 4th of June was a trough of 40-week cycle magnitude. So that was before this bar over here had even formed on the 6th of June. Because, of course, we do ST Outlook before the American markets open. So the first thing I'd like to say is that if you're trading the 40-day cycle, you make your trading cycles beforehand. And there's an interesting distinction between performing an analysis using Hurst cyclic principles and doing trading on the basis of Hurst cyclic principles. Okay, if you're an analyst, you might 2 weeks later still be speaking about getting final confirmation. But if you are trading, then you would have made your trading decisions beforehand. Okay, it's a very, very important distinction. So if I had been trading this particular market, then I would have been making my trading decisions beforehand. And if you take a look at that trader chat from 2 weeks ago, you will see that I was speaking about the potential formation of a 40-week cycle trough on the 4th of June, and I'm not sure whether I actually mentioned making trading decisions, but it's implicit in that discussion. If you think that a 40-week cycle trough might have formed on a particular day, then you make trading decisions on the basis of that potential. Okay, so we would have entered the market a long time before we get actual confirmation that that cycle trough has formed. But here's a little trick that I've picked up over the years, and I hope that you find it useful. Here is the little trick. Often, when price is rising out of a really long cycle, let's say we're trading the 40-day cycle, and in this particular example, price is rising out of a 40-week cycle. You often need to be careful about entering a trade purely on the basis of perhaps the 20-day FLD or the 10-day FLD, because the big mistake that you might make is that in fact the trough that has formed is only a trough of 10-day magnitude or 20-day magnitude, not a trough of 40-week magnitude, which you are expecting. Okay, so how do you avoid that? Well, the one way that you avoid it is that, of course, you look at all the potential alternate analyses, which is exactly what we've been doing today and what we advocate doing all the time. You look at all the potential analyses. And I don't believe there is, well, I didn't believe at the time that there was a potential analysis which included a longer cycle, so I could make trading decisions on the basis of that. So that's the one way that we do that, and I speak about it all the time in these trader chats. The other thing that you can do is watch the cyclic picture unfolding. And it's something that I often speak about, and I know people always roll their eyes when I start speaking about cyclic shapes and the cyclic picture unfolding, but I do find it very useful, and let me demonstrate it to you. Let me plot this as an FLD, as a candlestick chart. Let me hide those FLDs. Okay. When I'm trading the 40-day cycle, I look at the first cycle out of a potential really long cycle trough. So in this case, I'll be looking at the first 10-day cycle. And so for the first 10 days after a potential trough of big magnitude has formed, I watch that price unfolding. And let me do it for you. Here, let me show you. And I start drawing some cyclic pictures. And I know there's a question from Nathan. I'm going to get there in a moment, Nathan. Okay. I watch the cyclic picture unfolding. Now, you know that I'm obsessed by cycle shapes, and you will know that every cycle shape must be a capital M. Okay? Now, I want to trade the 40-day cycle, so what I do is I look at the much shorter cycles. Of course, I work with the intraday version of Sentient Trader, so I do this all the way down to, the hourly level, 5-hour level, the sort of 1-day level, 2-day level, and so forth. When you're working with the end-of-day version of Sentient Trader, the shortest cycle you can realistically do this with is the 10-day cycle. So let's have a look at the cycle shape of the first 10-day cycle that followed the 4th of June. Okay, here is that cycle shape. From the trough on the 4th of June, the price rose up to a peak over there, then fell down to the middle point, then rose up to a higher peak shortly after the open of trade on Monday, the 11th of June, and then it fell down to a 10-day cycle trough, which most probably occurred on the 12th of June. Okay, there is our M shape. I hope that you can all see it. It's a skew M, of course, because the M shapes are always skew. It's a skew M. There's my cycle shape. Okay, now that's really interesting. But what does that tell me? Okay, that's the important thing. As that cycle shape unfolded, and if I wanted to take a more cautious approach to my trading, what does that cycle shape tell me? Well, that cycle shape tells me that the underlying trend of the 10-day cycle is bullish, okay? And how do I know that? Because the peak of the cycle occurred very late in the cycle, okay? That's the first reason I know it. Second reason I know it is because the troughs formed at a higher level than the start of that cycle. Okay, now you need to start asking yourself the question, what are the possible alternative analyses that might have been playing out over here? Okay, now if one of the alternate analyses was that this was a trough of the 20-day cycle only, which in fact it was, that was one of the alternate analyses that we were considering. If it makes sense, if that was a trough of only 20-day magnitude, does it make sense that the 10-day cycle, the first 10-day cycle, would have a strongly bullish shape? Why do I say strongly bullish shape? Well, I actually grade bullish shapes, okay? And I ask myself, how bullish is this bullish shape? And one of the things I look at is how close to the end of the cycle did the peak form? Now, this peak, as you can see, formed 1 day before the trough. So it formed very late. Okay, this particular cycle played out over 8 days, which is in fact the perfect sort of average length for a 10-day cycle. It should take about 7.5 days or 8 days. So it's the perfect average length. Now, the peak formed on day 7 of that 8-day cycle. That's very late. If we were going to give it a percentage figure, purely on the basis of when the peak formed, I would say that is sort of 7 out of 8. Okay, I'm not sure what that is, but it's something like 87%. Okay, so that's an 87% bullish cycle at the end of the first 10 days. Okay, now does an 87% bullish cycle make sense if it was the first 10-day cycle following a 20-day cycle trough? No, it doesn't, because that 10-day cycle has a very bullish underlying trend. Okay, it must have if it's such a bullish cycle. All right, so therefore I could, on the 12th or perhaps on the 13th, once I'd seen that trough actually form, I could eliminate already the fact that the 20-day cycle on the 4th of June alternative to the analysis, I could eliminate that possibility. And I could look at other possibilities. What were some of the other possibilities? Some of the other possibilities were that either that trough on the 4th of June was a trough of the 40-day cycle. Now, if that was a trough of the 40-day cycle, then what would have been the underlying trend, and I find this useful to look at total underlying trend, what would have been the underlying trend of that first 10-day cycle? Well, the 2 cycles longer than that 10-day cycle were up, okay? So it would have been bullish. But every single cycle up above that, all the way to the 40-week cycle, was bearish. They were all pushing down because they're still heading down towards their trough, towards their 40-week cycle trough. Okay? And therefore, a 10-day cycle with an 87% bullish shape just does not make sense under that scenario. Okay? So I already had eliminated that possible alternative analysis. Okay, so I use this handy little tip in terms of looking at how cycle shapes unfold. I use it all the time in the market. If there are only 1 or 2 alternative analyses, and I decide to make a trading decision on the basis of those alternative analyses, then I will make trading decisions that will get me in really early, and I'll get into a really good move on the basis of a 10-day or a 20 or a 20-day FLD. Let me sort of turn off all this, and we can start having a look at the FLDs. And there's the 40-day FLD. In fact, let's plot the FLD on the basis of the high price, which of course you would use for your entries. And there's the FLD based on your high price. So in fact, you would very possibly enter on the basis of that FLD. But it's very important to understand that Hurst's trading methodology is one way of trading on the basis of the extremely valuable information you get from Hurst analysis. Okay, if you think that the analysis is not clear enough for you to make trading decisions on the basis of an FLD or a VTL, then I would strongly recommend that you use this